Boom! Jerome Powell just delivered a 25 basis point rate hike, but markets seem incredibly confused here on the news. They seem to be ignoring what he's saying. Let's take a look at the immediate reaction here on the price action. You can see Bitcoin on the left-hand side here, as we literally just covered this live off as Jerome Powell went through his press conference. And you can see here, the first yellow line is when we got the rate decision. Fine, the traders did their thing. We moved sideways and then the press conference started. We saw a massive pump here, all the way up to 29.5 here on Bitcoin, which is quite impressive, only to give it up in these 3 or 4 minutes. These are minute candlesticks, guys, later on in Jerome Powell's speech. This is the traders doing their thing. You see on the right-hand side, the Nasdaq did the same thing, but even more pronounced. Some big moves here to the upside, only to give it back up later in the day. We did get the 25 basis points. That wasn't a surprise, but markets seem to understand that Jerome Powell is being hawkish. He's not letting up, and he wants to keep his hands around the throats of the market. We need to zoom out and understand what is going on here. Jerome Powell is making good progress in terms of inflation, right? Inflation markers are coming down, and he now has his Fed fund rate above the core inflation. But he doesn't want to let up. If he lets up and gives this market an excuse to run, if he was dovish today, this market would have run. It tried to run anyway. It was ignoring him at one point, but he kept his foot on the market and pushed it here to the downside. If he lets them run, inflation can bounce back, and he does not want to let inflation bounce back. So he seems focused on the idea that we need to keep going. It's another rate hike. We need to get inflation down to 2%, and we need to seize this opportunity. He also re-emphasized that rates are going to remain high for longer, right? They're going to remain high for a while. He thinks we won't hit that 2% level until in 2025. So we're not going to be cutting anytime soon, guys. We're going to be having 5.25 to 5.5 Fed funds rate, and maybe even a little bit more for quite a while. Let's take a look at the Fed fund rate in real time. 80% of the market now are expecting a pause. This will change between now and then. It's a long time until the next Fed meeting now. We don't have one for all of August until 20th of September. So pretty much all of September as well without that Fed meeting. But markets, like we said, are setting themselves up for pullback. You can see here Bitcoin a little while ago, the day before, bounced from 29 and it kind of just hovered here. This don't look strong, guys. This does not look like a strong bounce from 29. And that is why when I zoom out to the weekly chart, you guys know I'm waiting for a pullback at this EMA ribbon. For me, that's what I'm looking for. The other way to look at this, guys, I'm waiting for this red box. I want this red box at the bottom of the channel, and I'm going to start nibbling in that box. Now, if I switch this to the daily chart, I'm already starting to nibble. We're already getting close to that box, right? 29,000 on this candle on this day here. I did a bit of nibbling here as we got into the low 29,000s. And again, if we enter this box, I will be nibbling. There's a huge warning. This comes with a caveat. Why? Because we don't want to lose this pattern. DCAing here is great, but what if we break down here? Then you get support here at 25,000, and then you get support at the next pivot point at 19,500. That's where the move originally started back in March. Horrible. We don't want this to play out. The other thing to look at here is this is a big head and shoulders pattern. Yes, guys, if you take my TA course, Ijaz, the UK//TA, you'll spot this a mile off. And guess what? How do you take the measured move of a head and shoulders pattern? You guys already know. Take the measured move. I'll do this very crudely here for you guys. Apply it to the point of breakout. And look, where does it bring you to? 19,000 range, similar to this pivot point here. So this could be a painful pull if we pull back. If we break down from here, we don't want to see that happen. What we do want to see is us moving into our weekly EMA ribbon. This is what we want to focus on, right? This is that bit. That red box there is nice in the EMA ribbon, just like we did here. We nibbled there and we benefited when we moved to the upside. Same thing. But what we don't want to do is we don't want to break down. We don't want to lose our weekly EMA ribbon at 26.7, right? So 27.7 is where the EMA ribbon starts, and we don't want to lose it at 26.7. Even worse, guys, what we don't want to see happen is a lower low. Remember, the lowest point of this candle is 24.8. This is my final cutoff. Even if we lose our weekly EMA ribbon, that's not great. But if we fall below 24.8, we have officially started forming a double top pattern. Boom, go back down, up again, come back down, and then we're forming an M pattern. We do not want that to happen on the chart. We cannot afford it. We can afford a pullback, right? Just like this was a pullback. We go up, we got a higher high, we come back down. We go create, that's now, this bit here will be your higher low, and then you go post another higher high, finally breaking through this peak here, right? Around that 31,000 resistance level. But we've got to get this right? So I'm personally going to be DCAing in here. I think we're going to get that opportunity. Jerome Powell still being strict with markets, as we can see, and that's going to give us some opportunities here to get a little bit of pain in this market. So already this week, we're down 2.6%. I won't be surprised to see the market fall a little bit more. But one thing is for sure, markets are in this phase where they're unsure. They want to rally, right? There's no doubt about it. The market wants to rally right now. It's only Jerome Powell and his actions holding the market back right now. Whether it's the NASDAQ, whether it's the S&P, markets want to move. Labor market is healthy. The economy is looking healthy. Inflation is coming down. They want to run. But Jerome Powell has to hold them back on a leash to make sure he finishes inflation off. And that's what his message was today, was that he needs to finish it off. And he wants to remind them that we could be at this inflated at this inflated Fed funds rate for quite a bit time yet. Now, what we don't have a clue of is when are we going to finally get that pause, right? He didn't give us a clue. He didn't say anything. He's saying they're taking it meeting by meeting, but markets currently think he's going to pause at the next meeting. But we know that markets change their mind all the time. Right, so we're going to have to watch this closely over the next few weeks. Let's see how markets digest the 25 basis points news. That wasn't a surprise. It's more Jerome Powell coming out hawkish and trying to put markets back down here to the downside. So for me, I'm looking for this area. This will do a couple of things for us. It will allow us to reset the RSI because, let's face it, guys, when we had this move here, we just weakened here. Look at the weakness in these weekly candlesticks, guys. Huge doji candles. Right? If you're following my TA course, we go in detail through this, guys, where I spoke about these candles. These candles with big wicks here, these are signs of exhaustion. You would have seen that straight away. So as soon as I saw those candlesticks, I'm telling you guys in the daily TA, and we posted this on the weekend, before this weekly candle started dropping 3% here, 2.5%, we spoke about this. I said, guys, this is too weak. We're not breaking 31. We don't have the energy for it. RSI needs to reset. This momentum needs to come back down. We need to collect some support, hopefully from about here, and then regroup for another big move from 31. We can't seem to do it right now. We couldn't do it there. We came back down. We couldn't do it here. We came back down. The problem is, however, when we come back down, it has to be a higher low. Has to. It cannot fall to 24.8 here. Then we form the M pattern. We do not want to form an M pattern. We want a higher low, rotate, and go break through that. When we do that, finally then, we'll start breaking through the important pattern, which is this. Our big cup and handle pattern. Remember, the price target of this is the one you will not want to be out of the market for. If you've already missed the market from 19,500 in March, 19,500, you've doubled your money here up to 30,000. We're sitting comfortably at 29.3. We're sitting there in just a couple of months. And this next move is going to take you up to 45. And if you miss this move, then you're going to be in a mess. Then you're going to be FOMOing in. You're like, oh, I had an opportunity at 29. I didn't buy in. I had an opportunity at 19. I didn't buy in. But you're still going to think that it's going to go to 69 and then 100. When are you going to buy in? You've got to decide that based on your conviction. And the way I keep this simple is to take out all the noise. Take out Jerome Powell. Take out that person on YouTube. Take out that Twitter person. Look at it and go Bitcoin, 29,300. Do I care if it's 18? Do I care if it's 19.2 or 30.1? Doesn't make a huge difference, right? In the great scheme of things, I want to be in. And if you want to be in, you get in. Otherwise, you're going to have regret and FOMO later on, and you're going to be buying at 45,000, 50,000, 65,000, right? That's what you've got to ask yourself now. Hopefully, you appreciate this quick update here on Jerome Powell's doings here at the FOMC meeting. 25 basis points, but the detail was in the wording. I'm getting ready for a market pullback and hopefully a big explosive move from there. Still bullish, but short term, get ready for that pullback and don't be surprised. Don't forget to go watch my video from earlier today here comparing Stellar XLM versus Casper. You're going to want to break that down, and I'll see you in the next one.